Porter and Goma are very excited to share with you our knowledge of the accounting aspects of running a business.
What is the accounting function? Well, the accounting function is actually how all the transactions all entail going through the business, all the cash transactions, all the money transactions, how the business actually operates. And what happens is your income and expenses, are there any assets in the business that you use to generate money? Has there money moved? Where the money moved to? You've invoiced out sales? Who owes you money? Who do you owe money to? And how is the business actually being funded? So all these aspects all form part of the accounting function.
With the accounting function, it's important for you to understand what you need to record from an accounting point of view. Obviously, the most important thing is recording how have you done, what is your profit, or have you actually made a loss. That goes into your income and expenses statement. And then you have your balance sheet, which will actually show your assets and your liabilities. You have a cash flow as well, also showing you where the money went and how you actually used it.
When you're running a business, if you use your individual capacity, you're not really governed how your annual financial statements are going to be drafted. However, if you're operating your business in a company, your company's framework is actually governed by the Companies Act in terms of your public interest score. You need to calculate what your public interest score is to understand what framework you need to draft your financial statements. So how you calculate your score is 1 point for everything of the following: 1 point for every million rands worth of turnover, 1 point for every direct interest in shareholding, 1 point for every employee, and 1 point for every million rands worth of financing. Small businesses generally have a scorecard below 100 points. And that means you don't have to be governed in terms of a framework to use. Anything above 100, the frameworks that come into place, being international reporting standards, and also then it also depends on how your financial statements are then drafted, etc. So from this point in mind, most small businesses are below the 100, do not require an audit, and can use any framework.
The reason to start a business is to have income. And with an income, you need to invoice out. And it's best to start right from the beginning to actually record all your sales or your fee income correctly on an invoice. An invoice to actually comply and to actually be acceptable to the business world, it's best to start off knowing exactly what a VAT invoice should look like. So set your invoice up right from the beginning to show the actual date, the business name, and if it's a company, the registration number of the company, the business VAT number or the business address must also state if it is a tax invoice. It should also have a tax invoice number and preferably in sequential order. This is quite important. Then obviously who you're supplying it to. It must have your customer's name, it must have your customer's address, it must also state your customer's VAT number. And if possible, if you're registered for VAT, it should show the VAT amount separately, and then the total amount of the invoice, including the VAT.
Once you've invoiced out your sale, you need to now record all the sales that you've done, whether it be on a weekly basis or a monthly basis or a yearly basis, in a sales listing or a sales journal. And that you'll record quite easily all the details per invoice on a listing sheet. And at the end of the year, this is what gets tied up to what you'll show in your profit and loss statement.
With all the sales, it's actually important always to understand how it was actually paid. Were the actual sales paid by cash, or was it a credit card? How did they actually pay for the service or the sale of the commodity? When sales invoices are not paid immediately, then you're going to have to record it as a debtor, somebody that's owing you money. And this is important that you actually manage this correctly. Each debtor should have its own set of records. Within the set of records, there's going to be a debtor's ledger, so you can actually see how much they've spent and how much has actually been paid to you on a monthly basis. So you can actually send them a record of this particular transactions.
Now we've spoken about sales, we now look at the expenses that the company has, and this also needs to be recorded, let's say in an expenses journal, on a daily basis or on a weekly basis or monthly basis, to find out how much we've spent creating our sales. It should have our date, an invoice, a list of who we've paid, who we are paying to, the description of what we're paying, and this needs to be allocated out in terms of the rand value exclusive of that, the VAT amount, and the rand value inclusive of that. And then we need to almost detail it out into the different categories, so you can record exactly what you've done in terms of advertising or in terms of computer expenses. So you've got quite a detailed analysis of how you've spent your money.
Here again, if you don't actually pay immediately for your expenses, you need to now put together a creditor's ledger, so you know exactly who you're actually going to owe the money to. And in this creditor's ledger, it will be quite important to record what the category of the actual expenses as well.
The minute you start employing staff, you need to create a payroll. So you employ staff, then you must make sure that you've registered for pay as you earn, and you open up a payroll, whether it be an Excel-based payroll or if it's going to be a package that you use for payroll. But within the payroll, whatever you need, every employee will have their own file, and at the end of every month you make sure that there are salary slips for each employee. The employees are paid. The pay as you earn that you've deducted off their salary has been paid on and submitted to SARS, and those payroll journals need to match up to, you need to bring all those payroll journals into your actual set of books in terms of journals and matching your payments to make sure that everything ties up. What is a VAT calculation? Well, the VAT calculation is very similar to a profit and loss statement, where you have your sales and you calculate what your output VAT would be based on the sales you've charged out, and you claim back your expenses, your input VAT. So you have your output less your input. So if you've made a profit, your output less your input would be higher, and that portion would be payable to SARS. However, if your input VAT, if you've got more expenses, let's say, than your sales, you'd have a refund due from SARS. And some things are, some sales are exempt from VAT or zero rated. If you're charging something overseas, you wouldn't charge the VAT on it because it would be zero rated. And certain expenses you cannot claim the VAT on. So examples are entertainment. You might be charged entertainment, but you won't be able to claim that input VAT from entertainment.
All monies coming into the business should be recorded in a cash book and into a bank account. And each bank account should have a separate cash book for each one. And this will show exactly how much money is coming in and how much is being expended.
What is a fixed asset? A fixed asset is something that you've bought, you spent money on, that's going to keep generating income, or you're going to start using it in the production of income. Generally, we look at fixed assets over the value of 7,500 rand, because then that value gets split over the expected usage you can get from that asset. And that expected usage is really done from accepted generally accountancy practices or SARS. So for example, motor vehicle will last you 5 years and you can depreciate that over 5 years. So you get the benefit of using the vehicle for 5 years, and you expense it over the 5-year period, which is depreciation. However, we just differentiate between what a fixed asset is and stock, and stock is something different. So a fixed asset is something we'll use, it will keep generating benefit from that. So we've got a delivery vehicle and it keeps on doing deliveries for us for the next 5-10 years. That's great. But if we let our part of our income is to sell off delivery vehicles, then that delivery vehicles become inventory, and we'll discuss that in the next slide.
Stock is items that you will be selling to create income, and stock is sold usually on a markup to make a profit. And items could also include like motor vehicles if that is your source of business, or if you're selling airtime, that will also be stock, stationery, tools, etc. This will always be shown in your balance sheet items as stock actually on hand as an asset. But once you sell it, it will go off on under an expense under your purchases in your income and expenses statement.
As we said before, you go into business to make money. And what's great is when you're paying tax, that means you're making a profit. And if you're making a profit, at least you know your business is doing well and it's generating income. So what you've done is your task that you set out to do is happening.
So what you'll do for your profit and loss statement or your income and expense statement is record all your income, all your sales that you've recorded in the sales year, virtually under a period that you allocate, usually under a financial year end, which is usually the end of, starts at the beginning of March and ends of February the following year. It's a 12-month period. Otherwise, you can always allocate a period that you want to look at. Taxes are usually calculated on the profit of the business, and you can also take off the previous year's losses if you've had to incur losses in the prior periods. Taxes can be complicated, and we'll go into the actual rates of tax in the next slide. And small businesses, if you can qualify as a small business, actually get better tax rates. In the individual and in the small business, your first $83,100 is actually taxed at 0%. Let us look at the difference between the company tax rate and an individual tax rate. In the normal company, we have 28% overall, and in individual, the highest tax rate is 45%, which can really be quite a lot higher than in the company. If you can qualify as a small business, there are quite a lot of different rates that you can get, which will really benefit you. And it goes from 0% right up to 21%, where you can really score quite considerably being classified as a small business.
When we look at the assets and liabilities, this is the final piece of the puzzle. This is the final picture of what you've done for the entire year as it is at a point in time. And it's split between what assets, what the company owns, and what is still expensed out, or liabilities, what they still owe out to other people. The assets obviously give security to the company or to the business, and liabilities are what needs to be paid out. And obviously the accumulation of your profit or loss is what returned in the business. So a balance sheet or an assets and liabilities always need to balance. That's why it's the final piece of the puzzle, because everything ties up to that. And when it balances, you get your final picture.
Once a year, once you've finished all your financial statements, whether it be in your individual basis or in the company, you need to complete then your tax return, which will record all these transactions. The tax return is then completed and submitted to SARS, and SARS then will assess the actual tax return. If you're registered for VAT and PAYE, this will always be reconciled with your financial statements.
Other services we have on offer, we are very willing and happy to help anybody with the individual tax returns, company tax returns. We can do VAT returns and submissions and registrations, pay-as-you-earn registrations, payrolls. We help people with payrolls, company formations and secretarial services. At Porter & Goma, we individualize packages to suit the client's needs. At Porter & Goma, we offer other services which we can tailor-make to suit your needs and requirements. Thank you for taking advantage of our information that we have on offer.
Thank you for taking the opportunity to look at our accounting workshop, which will help you setting up your records. And we really look forward to enabling you to making your dream business a reality.